The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Hi, folks. Basil Chapman here, sitting in for Tommy O'Brien. Tommy O'Brien, the author of Rocket Equities and Options Report. Usually does a show, Morning Market Kickoff. I hope he's going to be back on Monday. So in the meantime, let's look at the market. We're looking at the bonds up 24 30 seconds. During the night, they spiked all the way to 116 and 5 30 come back quite a bit. Now, the real issue is this. Yesterday at 4 o'clock-ish, the market was kind of weak. It had huge opportunities to rally, and it just failed miserably. And then it sort of came back a little bit. But between yesterday's close and right now, has there been any change at all other than the fact that if you went to sleep and woke up and said, oh, wow, nice day today, and market's acting okay, you would have missed a 1,400-point round trip in the Dow, 700 points down overnight. As soon as the news came out that Israel was having a military attack on Iran, it turned out to be a very precision attack, they say. We don't know. We're just listening to news. And the market said, oh, if that's the case, that's not so bad. And there was a huge upside reversal. I don't want to get into that. Today's Technical Friday, so for my show, the Target Ignitions Hour, we'll get into some of the technicalities. A nice question in the den was, do gaps have to be filled? It's a question I'd like to answer, but I'll take my time. Hopefully, I'll even remember it by the time we get to the 10 o'clock hour when I do my Target Technicians Hour. Let's just get to the market right now. So bonds tried to rally and failed. Gold spiked huge. Comparative to what it was just doing yesterday, it popped up to the 24.33. It went. That's current. Let me just check here. That's the futures. Yeah, 24.33 level, and then it dropped quite sharply. But actually, it's only down 5 right now. It's 23.92. Remember, as long as the Middle East, there's conflagration in the Middle East or oil shortages, whatever it happens, gold is the go-to place for countries because they get very nervous and they have to have a good gold supply. And that's the way I look at it. There are other reasons, I'm sure, but the core reason is that as long as there's Middle East tension, gold is really one of the ways that huge participants play it. Okay. And that means that the dollar, which is a currency, the dollar is down 24 ticks at 105.92, holding very well. I've got it at a peak F in the Chapman Wave methodology. We'll get into that in my show. But in the meantime, the weekly chart is still holding really strong in leg C. Stochastics at 87%. The dollar is in play because it's the international currency of preference. It's just as simple as that. Now let's go on to the markets themselves. So I'll have to do the futures because we got the current price of the futures where we went right down. It's amazing. We've been in a sell mode. We've actually had a sell on the Dow for quite some time. Let me just move this away here. Just need to get that out the way. There it is. So in terms of positions and that, we're looking at this Dow having a test of the 200-period moving average, and I drawn in this pattern, and you can see, you'll see the same thing in the futures. I drawn in this pattern, this arch pattern, which said that the target of the left side low of 18th of, that's 3 months ago, of January the 19th. This is the continuous contract. At that point, it was at 37,740. That was my target. I did a left side, right side price time match. That's where you try to find the midpoint. That's the plumb line in the middle. And then the number of bars on the left to the number of bars on the right suggested that today, isn't that interesting that today, there's the end of the bar. Click it so you can see right there. You see those dots? That's today. Should see some kind of a test, and that test happened to coincide with the 200-period moving average. To me, that is really important because that's where you can start to get quite a strong bounce. Who knows if that's going to happen? I'm just saying that's what we're looking at. Futures are now down or up 12 in the E-mini Dow futures, and that says that the 38,328 level is a possibility over the next few days if there is a rally. And then I'm anticipating this particular pattern. That's what I'm anticipating, but it doesn't mean to say it's going to happen. It's called the dreaded H. Why? Because when you come down sharply and then you have a bounce and you fail at a peak A or a B and you come back and retest that low, that's very important. Look how many times we've done this failure. In most cases, we haven't even made a peak A, let alone a peak B. Yeah, you did make an A and it came down to a lower low, so that's an A minus, and that's the pattern. Now, what would happen to change that? What would happen to say, hey, you're crazy. This had all the characteristics of a real low. If this was intraday, you would talk about this as a V-shaped recovery. Well, it wasn't. And V-shaped recoveries are fabulous if they go really sharply lower, and then you have a spike and the price closes well up in the positive. We haven't seen that. All right. So that's the YM. The weekly chart is the thing that has me most worried here, because that peak D, and I have to wait for Friday before I can put a down arrow, close to that at 4 o'clock, tells at peak D in the Chapman wave methodology. Let me show you another thing here, since this is technical Friday for me, but at the same time, as I'm doing Tommy's show, for those of you who don't know my work, let me just say that I always try to identify the lowest low bar, like this, and then count each successively higher peak, alphabetize them A, B, C, D, E, F, G on the way up, 7 higher peaks. You never get an H. So at that D, there could be a sharp pullback. You see the line down there, or within 3 days, 3 bars, I should say, within 3 bars, if there's a new high, you have a parallel count. And that says you've got an instant restart. You could even go to 4 higher peaks. It's a fantastic technical tool. But in the meantime, what we've got is a peak D in the daily chart, in the YM, and it's pulled back sharply. You've got a peak D in the weekly charts, and this is where other things can happen. Only a C in the monthly, and that says looking out, it's still very bullish. Shorter term, we've been, as I say, short. Now let's go to I don't want to waste too much time here. I'm just going to run these quickly. The ES is down 4 at 5,044. That's the S&P E-mini. I didn't complete that pattern. I have it in the S&P. Well, since the S&P is just about the same price. That S&P, look at that 9-period moving average where it turned weak, very down. It went pink, that instead of green. That's very negative. The stochastic is now at 5%. That is very weak. If it flattens out at 5%, it means that the price is not going high. If it suddenly pops and goes to 12%, you've got yourself a nice turnaround here. We haven't got that. Now, the weekly chart has gone to a peak C, but the E-mini has gone to a D, very legitimate D. There's no false peak or anything like that. All peaks, and that's a peak, and I put a plus sign on every D. I always put it there to say, warning, that's where other things can happen. So we're watching this very closely to see where it closes today. What if we have a 300-point up move today, close at the highs? What does that do? Doesn't do anything for the weekly chart, because the weekly chart 9-period moving average over the 40 is still very positive, but it does something for the daily chart. It says, hey, that's really good action. Just as we go to the break, let me do the NQ. NQ is down 60. This is also because Netflix, remember I spoke about that round number high? Netflix is actually down 42. Wow, what a nice indicator that.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This portion of the morning market kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
You're going to miss Tommy for this particular reason right now. Look, the NQ is down 55 at 14,491. Netflix, and Tommy's very often spoken about these different services, the streaming services, the just everything to do with the. It includes Netflix, it would be Disney, and etc. But look, it made a round number 639.00, round number, all-time high on the 8th of April. So I've used round numbers as just one of the myriad techniques that I've developed over the decades, as kind of not a benchmark of anything, but as a kind of a clue to say, and this goes back when we used to trade in quarter points, eighths. So eighths and quarters and halves. So I've noticed so many stocks. I'll just run through them right now. Look, NVIDIA, round number high of 974.00 on the 8th of March, trading now at it's trading now at 836, over 100 points down. I mean, I could just go on. In fact, no, I'll do it in my show. So you've got a really important stock, Netflix, also makes a round number high, and is trading down from 639. It's trading at 567 right now, down 43. So skip the whole thing about the round numbers, other than to say that what I would be missing right now is listening to Tommy discuss what the revenues, the membership, all the other the fundamentals that are really so important. I'm only able right now to talk about the technicals, and all I can say is, you see this low right here? This is that H pattern that we were talking about. If it closes sharply under 601.59, and it's at 566 right now, what it does is says, now you've got to look at the next level of support. The next level of support is 596. We're at 566. Then you got to look for the round number low that was made right here, which was a clue. This is the way round numbers can work as well. Here was a round number low, 592.00 on the 5th of March, and we went from 592 to 638, round number high. 639, round number high. Oh, that was interesting. Yeah, it had a 638 round number, and then the very next day it goes 639. And that just said to me, what do I deal? How do I deal with this? I call it fear of missing out. It means that you were so desperate to get in or so desperate to get out, you just said, I'm out at 639. And that turns out to be the high. I can't remember now the high of Qualcomm. Remember when everyone was talking back in 2000, when everyone was saying Qualcomm. And then there was that surgeon in, was it Los Angeles, who sold his, didn't tell his wife, but he had, what did he do? Oh, he took out a loan on his house, almost for as much as he could, and he put it all into Qualcomm. And I wonder if that was the top tick. I wonder if it was let me just have a look here. I think it's just worth it, just while we're talking about round numbers. Let's go to Qualcomm, and of course it's split after that, but the round number should still be there. So let me squeeze this now. I'll slide it over right there to the year 2000. I hope I've got that here. Yep, there it is. 100 round number high, Qualcomm at the exact top, 100.00. How important are round numbers? Let's see, it goes from 100 down to $11.61. Case closed. All right, so I treat them as very important, and that was a nice surprise. I didn't expect that. I know that my stock that a friend of mine had, his wife was like the number 5th person at, what was that company here with an A? Oh my, did I just forget the name? Akamai. And I remember seeing it at a round number high. And I spoke to him. I said, I'd be a little careful. I don't know what they ever did, but yeah. So yeah, let's just keep going. So we're looking at Netflix, and that's just a clue to me. And that's the reason why I got to it now, because the futures are down in the Nasdaq, and they're down quite sharply. So I don't see anything changing here. Look, we've got, okay, I need to go through this. I wasn't going to do it, but I really need to do this. Look, I use one indicator. This I call this is my longer term. No, this is my instrument of last resort. Like the Fed is the bank of last resort. So this is my indicator of last resort. When this finally turns down, you got to be careful. Here's the XLF from the crossover in the S&P Financial Index at 3394 back on the 3rd of November, only on the 11th of April, and I would call that 5 months, right? Did it turn negative? And it's been negative. To me, that's an issue. Nothing's changed here. That's an issue. So let me go through these right now. INDU, negative, look, green, 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 all the way from the 3rd of November, all the way green, green. Now it's pink. I treat that with respect. SPY, green, 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 green. Finally turns pink on the 12th of April, and it's still pink. QQQ had a little slightly different pattern because it had from the turn up at about the 6th of November, it had one brief weekend where on the Friday, I think it was the 5th or something like that of January, it goes pink, and by the 8th of January, it goes green again. Never turned pink until right here, got shaky. And look at the distance between the 9-period moving average and the 14. Look at the IWM. Much shakier, but it's gone. Look at the big spread. Look at the aperture between the 9 and the 14-period moving averages. All right. So I just wanted to get that across. So and that can't change on a dime. So I don't see too much change here. I see a relief rally, but I think it was overdone to the upside because there is still some nervousness. Now, we take a little bit of time. Maybe we have a little digestive phase intraday, and by 10:20 this morning, when I'm doing my show, the Target Ignitions Hour, that's when we should see the true colors, especially with options expiration. The options players didn't even have a chance to play from yesterday at 4 o'clock until this morning at 9:30 in another 4 minutes. Isn't that upsetting? All right, well, that's the way it goes. All right, let's get back to our story here. And I wanted to also talk about, I needed to do this. The TLT, up 46 cents. Let me take a drink of water if I'm going to last for an hour and a half. $89.29, up 46. Look at that. 87.79 was the low 3 days ago. And with all that's going on, it had a nice spike. Everyone thought, oh, this is it. Yields are coming down. I don't really see a reason. I can see a bounce, but I don't see a reason just yet to say that yields are going to start coming down. I don't see it as a more than a shorter term phenomenon. I don't see it as more intermediate term yet.
Tigers, the inaugural session of Live Trading Fridays with Larry Pesavento was a massive success. Trades were communicated, questions were answered, and money was made. Every second and fourth Friday of the month, from 9 a.m. to noon Eastern Time, Larry wants you to join him as he places live trades and takes your questions. That's right, with this monthly subscription, you receive access to 2 live trading events. We are gearing up for the next session Friday, April 26th, so there's still time to sign up. For this month only, use code LarryLive at checkout in order to secure $50 off your monthly subscription price for as long as you subscribe to the service. We'll see you next Friday, April 26th, Tigers. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hi folks, we're back. Basil Chapman sitting in for Tommy O'Brien. We're looking on this Friday, Friday the 19th. We're looking at the market's opened and the Dow is up 53 points coming around the bend. Is the S&P down 5. You got the QQQ. Where is it over there? QQQ is down 1, and we're going to see what happens next, because this opening salvo says those people that missed out on the incredible move overnight, it's almost like last weekend, right? Now they're looking at things fresh. But I'm worried about the fact that you've got a huge divergence here. The SMHs, that's the semiconductors, which I consider to be the benchmark, the ice cutter. the leader is failing again, even down at the 206 level, down 2. And that just says to me, if you've got the semiconductors in a sell mode in the daily chart, I have no choice but to consider that by the end of the day, I have to consider the weekly chart going to a sell signal. That's not the upgrade yet to the sell mode. We don't know. The day's young. Anything can happen. You've got to think that this rotational correction that's been going on is going to continue a little longer. That doesn't mean to say that the market itself couldn't go, the Dow couldn't go high, because the Dow is made up of really a fabulous diversion of a diversified portfolio. So did Procter & Gamble, was it Procter & Gamble, did they have earnings or something like that? Whoa, down 290 at 154.39, going for the 200-period moving average of 153. If it takes out the 154 level, that's a real quick run to the downside, and that is a Dow stock. And yet the Dow is up. So there's a whole divergence of what's working. So the question came in about what's really working, what's keeping the market up? Why isn't the market tanking? Well, it has, if it depends on where you're looking, and there's some areas that are already looking very poor. But on the upside, what we've got is within the Dow, let me just say, United Health had a big move. I think it was yesterday. Yes, yesterday, and it's holding today. It's up 3.49 at 496. It hit a 554.70 high late 2023. 558.10 was the high back in 2022, but it's slumped all the way to the 430s, and now it's at 496. So that's helping the Dow. Another one that is helping the Dow is, what am I looking at? Nike. Yeah. So Nike is up 34 at 96.07. You know, I talk about round numbers. I talk about them at the highs, and also when I need to, I talk about them at the lows. I spoke about Schwab. I don't know if any of you remember this, but Schwab did a Chapman wave volume climax reversal back on March the 13th. Let me just get to it. SHW. Way back over a year ago. Right there on the 13th of March, 45 round number low, and it had the biggest volume, the highest volume it's had just in forever. And my rule of thumb is when you get a Chapman wave volume price reversal, and especially if you get a round number low, there's a good chance that if it can hold above that level, but it has to hold above the candle spike, that's the whole candle. In this case, it's up in the 53 area. And it has to hold that for, it could not break the low for 28 days. And if it holds very well, it can then double it to 56 days. And this one didn't. It went sideways, but it didn't break the 45 low. It retested it around about May or so of that year at 45.65. And then it screamed all the way to 68.80. Pull back, came back down, and even then it was in the 47s back in November, and then it ran up to a high right there, that peak F high in December of 2023 in the 70s, pulls back, and then it goes to the most recent highs is up at 73.05. Well, that was a result of a round number low. Well, look at this one here. This is, and I have no idea why it's doing that, because, Nike went from 123.39 high back on the 20th of December, but it had 121 round number low that very same day. So it had the round number there, and then it came plummeting down. But what I noticed was that Nike hit 88.78 on the 10th of this month. It closed at 89 round number. A few days later, it had a 92 close, second round number, and now it's trading at 95.82. Look at this up move from here, from that low, when the market has been so weak. And that's a really nice sign of strength, but it's not a guarantee of continuation. So we are actually long. It's the first day right now. We've taken just a tad off. I think we did. I better check right here. Let's see. We've only raised the stop. Is that right? Let me just see. 23. No, it hasn't got there. It missed it by a penny to raise the stop. That's all I wanted to do. Much higher, we'll take a tad off. Now, one of the reasons so we are long this, but it's because of this pattern. And look at this pattern here. I'll just draw. I should do this in my Tiger Technicians Hour because this is purely technical stuff. But I want you to point out that you can't blindly think, oh, my God, the market is, No, there are positives and the negatives. You've got to try to find the positives. This one's worked well. This gap is a huge gap, and it hasn't filled or even close to filling the gap on the 21st of March. Toodle, which it's up at 101.92 with a low of 99.26. The next day, the high is 95.17. So today it's just yesterday for the first time we got into the gap. And the gap is actually from the next day. I'm going to take it from the next day, which is a high of 95.52. So we did that, and today it's following through. And this is still only leg A. I shouldn't say it's still only leg A as if it's supposed to go to B, C, and D. I'm saying it is in leg A at this particular moment, after all of this, after 1, 2, 3, 4, 5, 6, 7 trading days. But look, the stochastic went to 89%. The on-balance volume is lagging. So either that's a good sign, it's saying, oh, you're not getting volume follow-through, or it's saying, hey, for the on-balance volume to go up higher and get overbought like it was over there, you've got a lot of points to go. I don't know. All I'm saying is that the MACD is strong. Look at the relative strength. That was the clue to me, that the relative strength was holding really well on that retest. And the MACD histogram has gone very strongly positive. The 9 2 days ago went positive, 9 over the 14 is green. So I'm just saying there are some stocks. This might not have any more potential than maybe another point, and then it's all over. Who knows? Especially, look, here's this double bottom, and I made this the plumb line right there. Here's your plumb line. Number of bars going up, green. Number of bars, exact number of bars going down. It was a bar late to get there to the 88.66 level. It went to 88.80, and now it's running a little bit. I just wanted to go through that to show that there are certain areas that are working. I'm just very worried about the semiconductors not participating now. They are participating, but to the downside. I'll be back in a moment. Basil Chapman for Tommy O'Brien.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi, folks. So I had a question about someone wants to know. So where would I get in on Nike if I was not in? Remember, there's a whole process that's going on here. I'll do more in my show coming up, but what I'm going to say is that the 200-period moving average in the 120-minute chart is at 96.87. It's trading right now. It's down 37. It had a nice little pop to the upside. This one often has a little bit of a pop, then it gives back, and then by the end of the day, other decisions are made because buying seems to have come in. I think it's just a little bit oversold based on this 120-minute chart. So I would say if you can look at it again in the between 94.10 and 93.50, that's probably an entry point. But you do have to put a stop in. This is I don't know why this should be working. It's a real mixed picture in the apparel area. So Nike, B stock, they have sports wear, a lot of things. But meantime, it's working. Okay. So I wanted to also talk about the rotation that I'm looking at here. So if you look at the XLP is the this is Select Consumer Staples Fund. We're right to the 200-period exponential moving average. So this is always considered, everything for the last year has been totally topsy-turvy. Gold goes up, so does the dollar. Dollar goes up, so does gold. These are not what we normally see. Bonds go up, yields come down. The market should go up. It didn't necessarily work. Yields go up. The market actually had a rally, but now it's starting to pull back because the yields are getting a little too high, and you're starting to see that in Toll Brothers and builders, the home builders. However, look at this. Sitting on the 200-period moving average, made a peak D. You've seen one of the sharpest pullbacks it's had since the beginning of the move in October. And it broke above the inside track repellent zone. This is a Select Consumer Staples Fund. Now, what I wanted to say is, normally the staples area does really well when the market is very weak. So we didn't see that. We actually saw them all going up together for quite a while, going up to that 22 high. 2020, is that 2022? Let me just double check. Yeah, that was May of 2022 when it went to 78.29. Let me just put that in here. 78.29 on 5.222. And isn't that, let me just check that I did something wrong here. I forgot the point. There you are. Okay. So within that context, it's interesting to see that it's held the 200-period moving average and is trying to rally. To successfully, oops, wrong one. Let me just clear that up. Okay. Yeah, this is the one I wanted to look at, the daily chart. squeeze a little bit there, close it. Yeah, okay. So it came from 76.61, most recent high back in late March, comes down to the 72 level, only 4 points, not a big deal. But look at the distance between the 9-period moving average and the black 14-period moving average. To me, that says it needs time to turn up. The histogram is still very weak. The MACD, of the MACD, the on-balance volume is rallying. The price is married to a gray leg, a gray, because the stochastic still only way at the 13.37 level. So it's a work in progress. So each one of these sectors, the rotation, we've got to see exactly what's happening. The one that worried me the most is the IAI, which is the broker-dealer index, breaking down from 116 double top. I had a round number there, 116, then it just broke it by a fraction at 116.16, and it comes all the way down to the 108s. Now it's trading at 111.09. But look at the weekly chart, it's still really positive. So you remember I was talking about Schwab? Well, Schwab weekly chart has just gone to a leg E. I'll put that in, then I'll refresh to be able to get that. Okay, refresh. Oh, I didn't do that. I should have done that. I didn't restart the computer. Uh-oh. Am I about to have a problem? Please don't. Please don't. There it goes. Got it. Okay. So Schwab is holding really well. Look at this. This is a D. That's an E, F/B, because that's the low. This is holding very well. And this is telling me, that's why I said that I'm expecting a consolidation, and I'm thinking more daily charts than weekly charts just now. But those weekly charts have got me worried, because that pullback in the weekly charts are very important. So lumber, can you tell me the symbol? I can do wood, which is something different. That's the iShares of the iShares Global Timber and Forestry ETF. And off the top of my head, lumber at LB. Is that LB? I don't know if it's LB. Let me check it out. No, it's not. I think I always have trouble with getting lumber for the symbol. If you have the symbol, if you could just give me, I'd appreciate it. Question about lumber. But in the meantime, wood, the iShares Global Forestry and Timber ETF has done okay. It got to a peak D. D's where other things can happen. Look what that D there had a sharp pullback. That was back in 2023. And now we've got another one right there. Just a couple of weeks ago, 3 weeks ago, it made a peak D in the 84s. We're watching a pullback. So I'm just checking to see if I had a question about. No, I didn't. I need the symbol. So a couple of things came in that are very positive, but the part of this whole commodity rally. Look at this. We're looking at CC. Where did I type that? Did I type in the wrong place? Probably did. Here we go. So CC. There you go. CC, look at that. It made a high today. Oh, I meant to change this. That is GSHB, a possible D. Okay, let me talk about this just briefly. I'll do it more in my show, the Tiger Technicians Hour. So copper today went to an all-time high of 11,578. This candle here I've got as a C, but I needed to talk about it in terms of what I think it is. It's a Chapman wave flat base, unconventional flat base restart. Remember the restart that I talk about, instant restart? After 3 bars, you make a new high after D, gets an alternate count. But I worked, it took a lot of time, a lot of money to figure this one out, that if you get the restart and then after that E/A, it actually pulls back below the D low, there's a chance, and I've done this so many times, I don't even remember offhand all the different charts that prove this point, that at some point it turns around, especially if it keeps coming back, which is exactly what copper has done, that at some point it just turns around and it takes out the low. In this case, in the continuous contract, that'll be 8739. That doesn't give you time. I use other indicators. Maybe in my show I'll do a little work on that. There are other indicators that I use. So what I wanted to say, just as we go into the break, because we only got one segment left, I wanted to say The Dow, which is now up 121, remains in a sell mode. We could get a bounce, but I think from the weekly chart,
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hi, folks. So, Basil Chapman sitting in for Tommy O'Brien. I hope that Tommy will be back on Monday, but we're looking at the S&P futures are now up about 2. Overnight, there was this incredible 70-point move down, and then it came all the way back, and here it is positive. This is not just a relief rally, but it is carrying on this rotational correction that's going on as the semiconductors take a really well-earned breather. We looked at all those round numbers. Netflix is a great example. It's down 39 right now, made a round number high just a few days ago, and now it's way below that. So that kind of consolidation, but there are enough Dow stocks that are actually holding pretty well. So I just wanted to clarify that when I'm looking at this in terms of just look, yes, the 1 minute, 5 minute, and the 10-minute charts, the 9-period moving average, which has just been phenomenal in the both in, there it is, 5 and the 10-minute chart, but especially from the moment it crossed positive, the S&P last night at about just after midnight Eastern time, 20 minutes past midnight, that was the crossover. It's just being green, and as long as it stays green, and this 200-period moving average, which was a big resistance yesterday, at exactly this time yesterday, there was this resistance, and we pulled back sharply. Is this going to become support? There are enough signs to say that in some areas, and we just discussed that during the show, there's buying going on. And what's really important to me is what happens with the XLF, the financials. And look here, you've got XLF I didn't mean to do it there. I meant to do it over here. In the daily chart right here, that's the financials. Trying to rally, finally. It got really hit badly. Now it's rallying a little bit. So it's part of this consolidation that if you can see the bonds move, let's see, bonds now are only up 32 seconds, 0.32 at 89.14. I'm watching this very closely because there's been a very negative action in the financials. And JP Morgan took a huge hit just recently, and it still hasn't come back even today. So there's this rotation going on from what was fabulous to what now is in the consolidation phase. Netflix, Apple, all these stocks. But you've also got some stocks that are just independently trying to move higher. I'll try to get to that in my show coming up, the Tiger Technicians Hour. Fortunately for our subscribers in my opening call, we're in some of the stocks that are actually doing okay. But we're going to see if that lasts into Tuesday of next week.